All right. I apologize, y'all. So, remember one of them days, my internet was out. We come home, there's a bird in the house. JoJo broke a window, and apparently the bird come in that window.
No, Daddy, I didn't broke that. That was Emma.
One of y'all broke the windows.
It was Emma.
Okay, it was Emma. Emma broke the window, birds in the house. Then she catches the bird because she's an animal whisperer. So she catches the bird. And then she lets the bird go. So we got to cut the ceiling fans off. Okay, turn the ceiling fans on so everybody don't see the dust on our ceiling fans. JoJo, you turn them back on? We got the maid crew coming tomorrow, so we'll get all that taken care of. So that's why I always run my fans. See how dusty they are? Yeah, there you go. Keep them on. There you go. Just unbelievable. All right, so here we are. So happy Friday, everybody. Hope you're doing well. Here we are. Went to the Chinese buffet a while ago. It was mighty good. All right, so as we get ready for Thanksgiving, let me be loud. Let's see what's happening today. All right, so let's look at the E-minis. The E-minis, the AD is negative 89. How about that? And the market is just dead flat. Just dead flat, except for the NQ, which is the NQ, and it does what the NQ does. It's up 0.62%. So the AD is kind of peaking a little bit. Had an opening range of about 91 to 03, so that's what, 12 points wide. Whereas price, we are above VWAP, we're above the opening cash, we're above this pivot point, we're above the lower range of the opening 15 minutes, and we're above the overnight low. What is above us to stop the ascent? We've got the upper level of the 15-minute opening range, we've got the hourly mid, and we've got the overnight high. So what do we anticipate? We've got 3 things above, we've got 1, 2, 3, 4, 5, 6 things below. So I'm neutral to bullish on the remainder of the day. Figure it's probably going to pop up a little bit more, right? At least to I think we'll close again over the 4,700s level, probably for the second day in a row. That's my thoughts. How about the NQ? I don't know. It's the NQ, baby. It's doing well. And my kids are home because they had a Thanksgiving program today that I got to go to. So it's going to be loud in the background. And you'll probably hear me and my wife yelling at the kids senior school today. Daddy's in a session. Daddy's going to beat some R's. Y'all know how it is. We shall survive, shall we? All right, so where we at? What we're going to do? So, that's our assumption. I'm probably neutral to slightly bullish for the remainder of the day. But that tells us nothing until we go look at our little friend, the Big Green Monster. And the Big Green Monster tells us that. Let's see how the Big Green Monster is telling us. This is our pitching wedge right here, baby. This just gives us the stuff. And look at that. Look, just look, y'all. Look how this is acting as support almost. You see that? So we're above the 20, 50, and 200. Point of controls here. The value area highs here, value area low here. So what are we? So we're neutral to slightly bearish for the coming days, but keep in mind that we could clearly go all the way to this 47.53, which is still quite a bit of lunch from here, right? So if we were to draw our little probability cone, our little probability cone for the coming days would look like this, bounded by that upper range there, and probably by that value area low there. Ta-da! So if we don't go down, we go up. I'm a genius. Genius. All right, so, but then what do we got to look at? We got to look at our other pitching wedge. This is our sand wedge, our skew driver. What does our skew driver tell us? Well, skew driver for the day is 5.2. Oh, hold on, let me change my day here. Let's go to this one here. All right, so the 5.2, the one that's going for 5.2 is how many off? 45. See that? 45 away. So we'll go check it in. It's hanging out where it's been hanging out, which tells me that it's business as usual for us. Today is the 19th year of our Lord 21. There we go. So let's look, see what. Can y'all turn that game down a little bit? It's too loud. Unbelievable. All right, so you see, this is where we should be, between the green and the red line, 25 and 35. But we've been hanging out, baby. We've been hanging out. Don't know why. But still, we expect reversion to the mean. For reversion to the mean, this means the SPX would be going upward. So this has an upward bias. The neutral to upward, what I've shown you elsewhere with our Big Green Monster is, neutral to slightly bearish. So we're kind of neutral, right? So let's go. It's kind of cool, right? Let's look at our Greeks. How do the Greeks measure? So to do that, we got to go here. Oh, oh, oh. So sleepy. Now, let me take my groups off. So we are positive deltas, which we're going to be as long as we're holding the TQs, right? TQs are giving us 155. We have plenty of theta, which is sweet. We've got a very manageable negative theta, and we're up $543 on the day. Cha-ching. So let's look at a couple things we got to do. First of all, I got to make a decision, right? I, being the dummy that I am, sold a call last week against the TQs. What was I thinking? What an idiot. I've lost $534, including $275 today. Now, what could I do? I could roll that off, or I could close it. It expires today, right? Sold a call. It's in the money. I don't want to be called away with my shares. So I'm just going to buy it back, baby. That's all I can do. I got to buy it back. I'm not going to roll it because I'm not going to do it again. I'm just going to get out. All right. Admit your loss, Bob. Admit your loss. There we go. So let's do it in the other account too. The other account too, my positions are, I should have one here. It's in the money as well. You are a loser, Bob. Close the position. Position. You are a Dorcas head. Get out. Go. Right, we're out of both. Whew. Now I could have rolled it. I could have. But you know, I don't necessarily have a feeling that TQs is going to drop. Let's just look at the TQs. Let's go to that. See what it looks like. So we'll go here. We'll go to TQs. So TQs is a little different than the NASDAQ, right? Let me make sure I wrote these for this month. Yeah, October for November. So that's correct. So if you'll notice, here's the fair value range. Here is the overbought range. And now it, look, is in an oversold range. So if it's in an oversold range, what does that mean? It's oversold for the period above it. Now I haven't drawn it above it, so I'm running out of space, right? This thing has just traveled, look, from the 50 line, took a little consolidation along the 80% line. Now it's consolidating along the 100% line, trying to figure out if indeed I'm oversold and now going into a fair range above it. So with that being said, I'm not going to sell a call against it, but you could, right? Everybody knows you can do it. You can do it. Not necessarily that that's something that we have to do. All right, so that's the decision. I'm not selling a covered call this week. So with that being said, we see our Greeks. Our Greeks are great. We know we're going to be positive. We know we're going to have hopefully positive theta and a manageable theta. All right, so with that being said, let us look at our hedge. How's the hedge doing today? Oh, Bobby, oh, Bobby, oh, pal. So we go to ES. We go to 4 vol steps. Move this up to 15%. Now let's see what happens on a 20% down move. So on a 20% down move, let's make sure I hide simulations. So we're only looking at a single symbol. So on a 20% down move, it says I'm up $10,000. However, that does not take into effect the increase in vol that you would get on such a drop in the ES, in the E-minis. So when we put vol in there, we're going to be up about $120,000. Cha-ching, right? On a $50,000 account. That's good. But then you say, well, that's just with your E-mini positions. What about your entire portfolio? So you got to go to portfolio beta symbol. And then you find out that you're going to be up $11,547. Not as good, but still we're positive. So we're not going to blow up our account. That's what we're going to do. We'll make sure we don't blow up our account. Right? We want to stay in business to play another day. All right, so with that said, now there's really nothing for me to do. Now, I do want to show you this. Let's see, analyze. Let me go to MES. I've got a lot of positions expiring today. And I think some of you that have probably followed in my steps have probably got the same thing. So if we say high simulation, single symbol, we should be able to show you my positions that are expiring today. So right now, what I have expiring today is 19. I'm right at the $24.99, $2,500 profit range. Any reason to close any of those MES trades? No, I don't think so. Nothing really for me to close, right? I'm just gonna let those expire. The little shorts that are out here will expire completely worthless, and the debit spreads will close at a max loss, but there's nothing that I need to do or to manage, to do anything. Let's just look at what all I've got coming off today. So you see my MES trades are taking the majority of my buying power. Now everything else is not taking away buying power. So these things are taking buying power. And then look at this. Here's my 0 day to expect. Look at all those options that are about to come off. Isn't that cool? So I got all these options just going to expire. Nothing for me to do. Nothing at all. And they'll just come off, and nothing for me to do. Then I got some more coming off in 11 days, 28 days, 42 days. So the cool thing is I'll be able to reload, come tomorrow. So if I was going to go over here though, you can say, what would my Greeks be without that? So, you can sit here and go portfolio weighted, high simulations. You can come down here. Let's see, where's the expirations at? Is I have it on here? I have to figure out which expiration that is. But I could actually take it off and see, hey, what's that going to do to my theta, my deltas when all of those come off? But I'm not really going to worry about it. I'm just going to let those expire. I'm just going to play the game. You and I come in every day, we play the game, and the game is fun, isn't it? The game is fun. We know the strategy. Now, remember yesterday, we did say, that we could do a daily micro trade if we wanted to, and just do it as a 1-1-1 trade. Because if we were going to do the other trade anyway, well, you might as well put a kicker in there as well, right? So if we wanted to do a 1-1-1 trade today, certainly could do that. Now, one of the smarter things we could do is this. Remember, we talked about if you put on a 1-1-1 trade, one of the things that we could do is go in here and harvest one of our naked shorts to kind of free up some buying power, which would be kind of cool too, right? So you're putting on new risk and then taking off risk. Well, look at this. I could close this probably for 30 cents today. So I could take that risk off of that naked and put an entirely new 1-1-1 trade on. Isn't that cool? And then you've got basically a free debit spread on that is a bigger hedge for you than leaving on the risk of that credit spread or the credit or the short put down there. So it's all kind of things that you can do to manage and take off risk and put on new trades, make sure that we're keeping our theta good. And if you want to do a daily trade, we certainly can. So we'll see how we figure out on those, but I like that. Look, put on a new one. But hey, while we're at it, let's harvest one of those short puts. So basically, we've got a put debit spread on that serves as a hedge, a free hedge to the downside. Isn't that smart? So that's why I think we've got a beautiful, oh my gosh, I've never been excited about anything. Now keep in mind, I run several accounts. I've got a hedge fund. I was calling my attorney today. I think I'm going to implement some of this in the hedge fund. What do we need to do with that to let people know that we're going to be running this some? So we're trying to work that out as well. But we've been playing all year, and in this account we've tried different things. You've seen me do everything poorly that I possibly could. You've seen me do individual stocks, and you heard me say what the only reason I did them is try to show out in front of y'all. If I'm gonna be totally and completely honest, as I've always been, and y'all know I am an open book. You know everything about it. When I go to take the certified financial planner exam and I flunked it. Okay, I did not pass. I told you that. I don't sit there and go, oh yeah, I passed it, and when I don't do it, I tell y'all everything. Y'all know everything about it. I've been banned from the Krispy Kreme donuts in First Avenue North in Birmingham, Alabama. I've been chased by 4 police cruisers. I've been locked up, put in jail in 2 different states. I don't hide nothing from you. I am who I am. I am the mistake maker that I am. So you've seen me do every dumb trade on the planet. You've seen every one of them. You've seen me do every stinking one of them. And yet, we are almost flat on this account all year. Now this account should be up big, right? But we started the year off, what was it, 51,000? I think we started off at 51,000. And we are at Let me tell you where we're at today. We are at tell you where we're at today. We are at, in this account, $50,651.47. That's it. 50,600. That's this account that we're trading right here. Y'all seen that. So we're down maybe $500 on the year. After all the dumb stuff we've done, the dumb stuff, you know, trying to show out in front of y'all and trade stocks. I don't trade stocks. I knew coming in to doing this with y'all that I didn't trade stocks, but I thought, oh, y'all get bored if we don't trade stocks. So I traded DraftKings and I traded Apple. We traded Snap and all that kind of garbage. And that's just not me. So rather, I've told y'all this before, rather than trying to find the needle in the haystack, we don't want to find the needle. Right, there's the needle. We want to buy the haystack. Why try to find the needle? Let's buy the whole dang haystack. Right? So there we go. So let's get the whole haystack. So with that being said, what are we going to do? All right, so everything looks good. Everything looks fine. So why don't we, okay, we'll probably do a 1-1-1. We'll probably do that. But first, let's record our net lick for the day. We're going to be doing that on Fridays. So here's our TQQ AIM Empire. Uh-oh. Sale, 5 shares. Tubby. Okay. Well, if it says it, we'll do it. So what's TQQ going for? 177.46. Let's sell 5 shares. 177.46. 77.46. Trade TQs. Sell 5 shares. Sale 5. $177, what is it, 46? It's at 43 now. 177.42 now. See if we can get filled on 5 of those. And bingo, we're out. So we got filled at 177. Let's make sure. It's hard for me to remember how this is. Filled at 177.4302. 177.4302. 177.4302. So we do -5 and we do TQQQ. Yep. And the year of our Lord is 1119. Wow, we have not had a signal in 10 days. How about that? Then you got to put no here. That is very important that you put no, because no means we're not using new capital. We're not rebalancing this new underline. So we're going to keep that no. So then when we go to the dashboard says do nothing. Ta-da. And it says if we had done absolutely nothing, no options trades, no anything, we would be up $11,000. Oh my gosh, if I had just run the AIM program, right? But no, Bobby had to sell options. Bobby had to do some covered calls. Bobby had to do, see, I'm telling you, I make every mistake in the book. So, and occasionally you need to make sure these are right. It says I got 216 shares of there and 205 there. Let's make sure that's indeed what I got. 216 and 205. So there's 205, there's 216. Now we're going to have to do some calculating, some ciphering when this thing, what, Joe? What the hell you do, Joe? What are you saying? Oh, you want my phone?
Yeah.
Okay. Okay. Have kids, they say. It'd be fun, they say. Then they said have 5 kids, they said. It'd be fun. Okay, so where was I? So y'all see we did that, right? So we sold our 5. All right, so sold our 5. That looks good. So let's record our net lick for the day. And he's got my phone, so I got to look at it over here. 11, 19, 21. Let's see if I can. 1921. Hold on, let me take it off the side so we don't see count numbers, blah, 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 blah. I said, let me take it off the side. I said, how do you get it up there? There we go. Hey, is there a way I can show my net lick without showing y'all my count number? Yeah. How do I do that? Okay, come on. Right here. Yeah. Yeah, Ian. Yeah, Bob. I mean, it ain't like y'all don't know it already. I've showed it so many times. All right, here we go. So we've got 56, 12, 93. 56, 12, 93. Oh, crap, wrong one. 53, 12, 93. 50. Here we go. 53, 12, 93. No, 56, 20, 66. 56, 20, 66. There we go. 56, 20, 66. Okay, so how have we done? So since last week, we made $1,893 in a week. Y'all, that ain't bad. So let's see, what percentage of the week is that? And I know we shouldn't be counting it this way, but if you make 1893.48 and you started with 48,427 divided by 48,727.18, what's that in a week? So in a week, we made 3.88%. That's really good, right? So let me hide my little buying power so I can bring it back in. Crap. Oh. All right, so we got that taken care of. All right, any questions there? So then we need to figure out, well, we've been comparing this to what SPY's been doing. All right, so let's see what SPY's doing. SPY, so 1119. If we had started with the same amount we started in this account and just bought 100% SPY, what would we be doing today? 21. Well, it depends on what SPY is trading for. So SPY is trading for 469.19. So let's do that. 469.19. 469.19 means that we would make 47,651.85. 47,651.85. 47,651.85. Everybody with me? So we would have made, if we were just 100% in the market, we would have made 2.43% this week, and we would be up 4.87% since we started. All right, are we generating alpha? So alpha would be, are we above 4.87%? So in this account, we are at 11.41%. And since we started, we made $5,183. That ain't bad. Here's what's ticking me off though. We would have made, woulda, coulda, shoulda, we would have made 11,075 if we'd done nothing but bought the shares and let AIM run itself. So what does AIM do? AIM is an ATM machine. So when price goes up, it converts shares into cash. When price of TQs go down, it uses the cash from our ATM machine to purchase additional shares. It's a beautiful plan. And if you're running nothing else, if you don't want to do the stock, I mean, you don't do the options trades, hell, do that, right? I mean, you'd be up $11,000. Instead, we're underperforming at $5,183. The only problem is that ain't nothing to laugh at. I mean, that is nothing to laugh at, right? In how many days? 34 days or so? You know, we made $5,183, 11%. I'll take that any day. I will take that any darn day. All right, so let's check the other account. So the other account is the Tastywork account. Now, remember, the Tastywork account is an account that I'm trading for an old bud, and his account, we started this account on March the 26th. And on March the 26th, this account started with 35,000 and has had no deposits made to it whatsoever. Nothing taken out of it. So where is this account today? So we started at 35,000. Now, here it says we started at 39. Well, that's true because we started at 39. This is what we started with on October 19th when we put it into the Sweet Butts plan, right? So this is what we started out with. So today, that one is at, so what we're at today. Give me a second to take off the privacy feature. Let's see what it is. Okay. So I could show this one. No, I can't show it without showing you the thing. All right, so today we are at 47, 565, 66. So we're up, 20% since we started with the TQ program on October the 19th. So I kind of like to see what I am when I started this on March 26th. Right? So we started on March 26th with 35,000. So we are at 47,565.66 minus 35,000 equals 12 divided by our starting is 35,000. We are up 36%. Y'all, that ain't bad. That is not bad at all. But we're up 20% of that. What are you doing throwing my phone?
So I was wondering when you're trying to give me.
Okay, I'll call them later. Just take it in there. So we're up 36% on the count. We're up 20% of that since we started the TQs. What are you doing, son?
I need this.
No, you don't. You'll break the shell. Get up. Go play. Go play in the yard. Play in the yard. Go chase the donkeys.
I don't want.
So that's really, really good, y'all. I mean, how can you not be happy with this, right? You start with 35 and you got 47,000 and you're up 36% on the year. Sweet. All right. Bad thing is, if we hadn't sold any options, where would we be on this one? We would be up $8,000. And so we're not quite up 8. We're up what? What did we say we're up? We're up 19.47. We're up 77.50. Well, we're closer there, aren't we? All right, so let's go to put our SPY in over here. I'm going to measure that too. So SPY is 1119. What if we've been all SPY in this account? And SPY is at 469.34. 469.34. So we are at 41,565.58. 41,565.58. So SPY would be up 4.4%. We are up 20%. That, my friend, is alpha. All right, good. So are we getting any? Yeah, it wants us to sell 4 shares here. So let's bring that account in. All right, so here we go. Privacy mode. All right, so then we go. So it wants us to sell 4 TQs. So let's do that. TQs, we're going to sell 4, hit the bid. Don't sell 100, you'll be out of business. -4, -4. We'll do this in, chaka-cha, chaka-cha. So see, we're just converting things to cash, y'all. We're converting them to cash. So that got filled at 177.11 for 4 shares. So 77.11. The year of our Lord, 11/19/21. Oh, we saw one yesterday too. I didn't know that. So we did -4 today. There we go. And got to put no there. There. So when we come back over here, it should say nothing. There we go. So ta-da! And so we've got 35,000 of TQ. We got 4,300 of TMF. And the remainder is cash. So we've got total cash. Those numbers different. Those numbers should be the same. I'm going to check on that. All right, so we're good. So everybody got a question about that? I mean, it's blowing my mind. Well, Bobby, once you started, you bought it for $1.42. Yes, I mean, 142 is 177. No wonder you made. I know. Hey, I know. Trust me. I got in at the right time. There is no doubt. So I'm not getting cocky, right? I'm trusting. We know that there could be a hole in the program somewhere. The good thing is we've not found it yet. All right, so let's look at maybe doing the 111 for the day. So we've got positive deltas, we've got negative vega, and we've got a little positive theta. All right, so let's look at doing a micro. Because the market's flat anyway, right? What's the market doing? It's down 0.05, so technically we could sell one of these anyway. All right, so how are we going to do it? So let's look at our buying power and all that kind of stuff. So we got 14,000 in buying power. So let's trade this puppy. We're going to go closest to 45 days or so. All right. And we're going to do a long put vertical. We're going to make it 50 points wide. Right, 50 points wide. And we're going to sell it for $10. I said we're going to sell it. There we go. We're going to do it for $10. So that's 12. Now it'll get stuck. Then I'll have to fuss. Then it'll get stuck again. Then I'll have to fuss. Then it'll get stuck again. Then I'll fuss one more time. Then I'll be like, unbelievable. We're not going to sell one on top of where we bought one. I just don't want that. You know, I mean, look at there, y'all. That's $10, but I'd end up selling one here. I don't want to do that. I could go down one, see what that looks like. Buy and sell one for $9.50, $9.75. Should I do that? Yeah, let's do that. And let's do 2 of those. Now, for $9.50, so we'll probably have to pay $9.75. Let's do that. Shut we're doing good. All right, so then we got to go down and sell 2 contracts of something for about 20. So let's sell 2 of these. 2 of these for $2.25, $20.25. Now we got us a nice little 1-1-1 trade on. All right, so let's see what that is. Make sure everything's filled. And let's go put this on in the other account. So we got you. I can't wait till I get my first sale signal. Oh man, it's so cool, man. When that first one comes in and you go, I just converted it to cash. And Matt, you should be doing really well right so far, right? I mean, it's been nothing but up since you come in. And you were like, I don't know if I should come in today because why? We're, you know, it's already up so much. And as long as we all have diamond hands, we're hanging on, baby, until this thing goes below the 10-month simple moving average or the 200-day simple moving average. And if you, I mean, it ought to be the point that we go, we're staying in, baby. We believe, we're believing. All right, so here we go. 42 days. And we did the believable. We did the 45.90, 45.40. I was in the right darn thing. MEX. There we go, Bob. Come on, baby. Get your stuff together. 42 days. 42 days. Let's see, 45.9, no, 40, yeah, 45.90, 45.40. 45.90. 45.90. There we go. We're going to buy that one. And we've already got loans there, so that's fine. 45.90, and we'll do the 45.40. Got to hold your control key down. 45.40. We'll sell where we've already sold one. And I will do 3 contracts here. I got enough buying power. So then you got to hold your control key down, and then we're going to go sell where we can sell for about 20. So we've already got some there. So let's sell some more here. So let's sell. And then we'll sell 3 there. If we could get, oh, 11.25 credit. Look at us. So we probably won't get that. We'll probably go down to 11 credit. So we'll get filled. So we'll get filled for $11. Come on, Bob. I said, come on, Bob. Working. Yes, cancel replace. So let's go 10.75. There we go. There you go, Bob. There you go, Bob. You sweet little feller, you. All right, so let's go put him in there. So what does that do to our grades? Now we're 286, 110, negative 144. But remember, we'll have a lot of that Vega rolling off at the end of the day because we've got all those things that are. So we're going to call this 111. Good Lord, where are we at? 26, 27, 111, 28. So this is probably 111, 29. 111, 29. Yeah, see? Yeah, see? So let's go 111, 29. Move to group. 111, 29. All right, so we got 11129. What the crap is this? That's just my working orders. And then we got my TQQs. That's just where I sold shares. Okay, so everything's got its own little place. We're at $548 on the day. We are kicking booty. The hedge is set. Our stuff is set. Now, keep in mind, another thing we could do here, and I want to show y'all. on this MES is this. Okay, so we put on risk today, right? Now, y'all help me explain this because I'm doing a terrible job of doing this. So if we did MES and we did the curve and we did the analysis, so it shows all of our positions, right? You see this great little downside hedge that you and I created. So we don't care if it goes up. Look, we're going to make, all the money up here. But look what happens if the market goes down. Unbelievable. We've got now grind down protection of about $5,000 to the upside. Y'all see how sweet that is? So we put on new risk today. So I start looking out here to some of these others and I go, I could close some of this, right? I could close some of these cheap little things. Let's see. This has got 11 days to it, right? So 11 days to it, and I can close it for 35, maybe 30 cents. Why would you not do that? Because keep in mind, I sold this for $20. I have made $17 and 30. Wait a minute, no, I sold it for 20. So I've made $19.70 on it. Help me explain this. Ken, help me explain it. I sold it for 20. I bought it back for 30. That means I've made, y'all tip me, $19.70. Okay. With that $19.70, I used $10 of that to buy a put debit spread. So if that put debit spread goes to max loss, it's $10. So I'm making $9.70 in profit, regardless. Plus, I still have that hedge on. And that's if the put debit spread goes to a total loss. That's what we call a high class problem. Did I explain that good? Does everybody see that? I sold this for 20. I bought a put debit spread for 10. So that gives me, let's say I've got a $10 credit. So now I'm going to do a 30-cent debit. So that means I'm going to make $9.70 come hell or high water. And that is with the put debit spread going to full loss. High class problem. And that hedge looks beautiful after I do it. Up 10%. My first sale will be when TQQ hits 205. And guess what? It probably will. Now, here's the thing, Matt, we're going to have to worry about. They're probably going to split this thing like a 2-for-1 split. So then we're going to have to use our little noggins. We're going to go in, we're going to change some stuff to get our thing back in line. But hey, another high class problem. So let's sell 2 of these for 30 cents. I mean, buy them back for 30 cents, right? We're going to put a debit in there. Cha-ding, to get out of this. Okay, I may have to do 35 cents. So it messed up my numbers just a little bit.
Did you say they were going to split MES?
Oh, I'm sorry, not split MES, split TQQ.
Oh, okay.
Yeah, I would imagine they're going to split TQQ at some time pretty soon. If it keeps going upward, they'll probably split.
That generally has a tend to get the price will go up.
Yeah. Oh, yeah. After a split, right? Because I mean, think about it. It's just human nature. If you split, if it's at 180 or 200, it goes down to 100, and then people go, "Wow, TQQ's at 100. Wow, it's just at 180." They don't realize it just split it, but it's just human nature to go, "Well, let's go get some more." So so y'all see, I took off risk, right? I took off, and now I've got a can't lose trade of that initial, whatever. I should probably do the same thing over here. So what I should probably do is look at my 11114. Let's see, that's got 0 days, so we don't want to care about that. Yeah, let me go over here. This would be the best place to find it. Let's go to my MES trade. So we don't want to worry about any of these today. No need to take anything off that's expiring today. But if I could go to something that's a few days out and take off a little risk, why would you not? It's just making my hedge a little better. So let's see what we got out here. I talked myself out of this yesterday. Let's see if I will today. No, I'll take these off. So right here, I've got 4, right? So got 4 here. They're at 35 cents. Now, had I not put another one on, I would definitely leave this. And, even now I'm sitting there going, gosh, I probably still should leave it. 10 days, it's 35 cents. The chances of this thing, I mean, it's probably going to expire worthless. There's a high probability. Do you waste the commission to take it off? The only thing is I'm taking risk off, and that's always good. So let's see, I wish I knew what group that's in. What is this? This is the, because I'd show you what it looks like. Here, let's find it. Let's just find it. Which one of these has 4 in it? 21st, it's not that one. 18th. That's it, isn't it? Yeah, with 11 days. So that 3850. So let's see what that would look like. 11118th. Let's go to the Analyze tab. Let's go to MES. Let's go to single symbol. What did I say? That was 11118th. Let's show you what it looks like. Here's the 11118th. See how pretty it is? Oh my gosh. What a beautiful little structure that you and I have created. Y'all see that, right? Just gorgeous. So what happens if I take those? So you see what happens. I'm profitable, profitable, profitable all the way across the board. If it goes up, I make $262. If it goes down, I make $262. If it goes up into there, I could make $1,500. So why in the devil, Bobby, would you take this thing off? Well, let's look at it. If you take off those, wait a minute, that's the wrong one. Well, that it still showed the thing. If we take off the naked shorts, look what this thing becomes. Do you see what? That's why you take it off. Look at that, y'all. Now all of a sudden, if we get a big down move, look what we're up 1,000, regardless of how far that falls. See what a sweet little hedge that is. And you're not losing money, Bobby. You're losing 250. No, you're not. You made a profit on the whole trade from closing those shorts, right? Let me look at my Greeks again.
Bobby, what I've been doing with those is instead of going for double, finding double premium on the second short, I look for between 2 and 3, usually 3 times.
Yeah.
So if I have if my 50 wide is say goes for 8.5, I'll look for 24, 25 on my second short.
Oh, cool.
And then now what you do is in many ways, you're tightening up on the strike, so you are assuming some more risk early on.
Yeah.
But if you think about it, if you get put on a short put there, not the 111, you just still have, there's no change in the risk. In fact, the risk is less because you're going to, never mind, the risk is not less at all. But what happens is when you see that thing erode, you can pocket something in your money and then and pay for the spread. And it's an amazing thing. I have stopped since I've done this. I've been doing this for over a month, and I have stopped buying VIX hedges because these long put debit spreads are just, it's phenomenal. I mean, on how much money you can make that fits up that middle. It fills up the middle part between where you're at now and when the black swan hedge is kicking in. It's an amazing trade. It's like getting your hedge for free.
Yeah, it's one of the coolest things, and I'm so excited about it. I'm glad that you are as well. I just think that this trade, the 111, what it is to me, y'all, is it's very similar to what we were doing in the ES with the space trip trade, but it's a smaller trade and we're doing more often, and so you're kind of spacing them out more. I mean, it has replaced the space trip trade for me, and it's also replaced the daily selling the 10 Delta put for me. It's replaced a couple of things for. I just love it. I mean, I just love it. And maybe I know the conditions are right, and we hadn't lost on a single one of them, but my gosh, what a strong! Look at all this stuff I got coming off today, y'all. Look at this.
That's what scares me the most, Bobby, is I have yet to lose on this trade.
Yeah,
it's like the law of averages have got to be, coming.
Yeah, I mean, how can this trade be so good? I mean, think about it. Think about how good the daily put was, y'all. Right? We know the daily 10 Delta put, selling that, managing it, blah blah blah, was so good. But now think about that trade, but you're adding a put debit spread with it. I mean, I don't know. It's just I've been blown away by it.
Once you get about 7 to 10 of these debit spreads paid for, I mean, think about how much money is locked up in that spread if it ever went south on you, and you got to and you collected money from these debit spreads. It's gonna cover a whole lot of what the pain from those short puts that you got. It's unbelievable. And it's like, I can't believe they don't make this against the law.
That's what I'm saying, Ken. I'm really, and I'm trying not to be overconfident. God, I'm really trying not to. And I know things are working our way, y'all. And I don't want y'all to be swept up by it too. But I've been doing this for a long time. And it really takes something for me to get. I mean, I'm excited. I'm a nerd with this stuff. Y'all know I love it. Spreadsheets and playing with the numbers. I think about it all the time. I've told you about, I'll be on a beach vacation and we're on the beach and Beth's thinking about us taking a stroll down the beach and holding, and I'm thinking about markets, right? I'm thinking about the ups and downs of the market. And, we're just nerdy enough to love this stuff to the point. So it takes a lot for me to go, I'm really excited, but I'm really excited. We have something that will give us appreciation of assets, which is the holding of TQQ. Now, keep in mind, conventional wisdom tells us that we can't do that. The experts are telling us we can't do that. And who are we? We just a couple old country boys living out on the farm with a goat or two over here. And, we're coming up with stuff that we go, hey, watch us. I think we can. Now, maybe they know something we don't know, but it is hard for me to see the success that we're having. And I know it's up from 142 to 176. I know that. And I know I got in at the right time. But I still think we've got that downside covered. I think we've got the grind down covered. That 111 is a beautiful trade. And yeah, we probably do need to, when we put a new one on, take some risk off of one of them. It's already paid for itself. It's a free trade. It's a free trade. We've taken in a credit enough to pay for the debit. We have made enough. I mean, if you sell something for $20 and you can buy it back for 30. So that's your cost of goods sold is 30 cents on that naked put, right? It's costing you $30 and you sold it for, no, it's costing you 30 cents and you're selling it for $20. Now, y'all, if you're in any business on Shark Tank, they're looking for a minimum of 50% margin on the profit margin. Well, if you're selling it for 20 and your cost of goods sold is 30 cents, that is a hell of a good margin. So why would I not buy that back? I just talked myself out of it, right? I was like, well, yeah, it probably is going to expire in the money, but at the same time, that's going to make me a great hedge as well. I should take that. I should buy that for 30 cents. So let's do it. I mean, I'm talking myself into it right now. 35 cents. I'm going to try 30. Try to buy it for 30. I don't want to be too greedy, y'all, but I've got a free hedge on that. That's not going to fail. So we're going to have to go 35. That's okay. Cancel replace. And we're taking risk off for the next 11 days. So that put debit spread is entirely paid for. Gone. Look at that. So that puppy has been harvested now. And on the analyze tab, I showed y'all what it looks like, right? With one expiration. Let's see. Let me show you what it looks like. One expiration. Single symbol. I gotta find it. No, single symbol. Well, I've got it off the single symbol. But y'all saw what it looks like, right? When you take it off and you've got a free hedge. It's just a remarkable little deal we got. All right, questions, comments. Do you know how to do? Do y'all know how to do stuff now? So if you don't know how to do the big green monster, look, search Sweet Bobby Voodoo, and you'll have a whole little session there where that's all we do is draw big green monster. We go through the skew driver every day. Then we look at the volume profile with our big green monster. So we're making market assumptions. Should I sell the covered call this week or not? That's part of the plan if you want it to be. It's optional if you don't. I'd be much better never selling a covered call. There will be days when the covered call will come in handy. I just don't think I need it right now. So we've got a plan that gives us upside. Here's the pretty part, right? The pretty part is this. Let me set my little tablet to work here. I love trouble. How many little tablet? How many little baby? Little friend, old friend. Okay, so here we go. So if we go, we've got something that here we go. So we've got something that does this. I don't like since they changed my board up. I don't like this. All right, so we've got something that if the market goes up this way, right? Well, we're going to make money on our TQs. So that's our income producer. But then you say, but Bobby, what if the TQQs go down and the market goes down? Well, that's where we've got our little 111, right? Our little 111 that protects us on that grind down. Remember that little hump? That protects us on the grind down. Well, then it goes and falls off the map though, y'all. Then it does this, right? What have they done to my drawing thing? Anyway, so then we've got the black swan hedge down here that lifts up the profit when that pops down. Hey, what a great little plan. I'm just excited. I almost can't sleep at night. Now, with that being said, with me being excited, what was the skew today? Wasn't it 45 or something? I think it was 45. Man, yeah, 45. It was 45 today. So with that being said, all right, so I got the bug man coming next week. I got the carpet cleaners coming next week. I got the maid service coming tomorrow. We got the Thanksgiving next week. Let's take off next week totally, right? So let's just, my little Alabama class is off. My little Cumberland's class is off. Let's just take off here, enjoy the week with your families, have a wonderful Thanksgiving, and we'll just take off all next week. But if you do have questions and you get, puzzled on something, go into the room, post a question, text me, call me, whatever, and we'll work through it if there happens to be something that, is monumental. I will be trading. I mean, that's what I do. So any trades I do, I'll try to tell y'all what I'm doing if anything goes awry. But here's the great thing. Thanksgivings are normally up weeks, right? Let's see, on the 111, do we need to worry about the short that we use to pay for the debit spread? Well, we hadn't had to yet. That's the problem, right? Now, here's the thing. I don't look at it and I don't look at that and go, oh my God, it's this delta or it's that delta. I really don't look at it because here's the thing. I know that if the market goes down, I've got enough of these already that I can easily, look at this one. 37.90, it's a 0.07 probability of being in the money, less than 1%, almost 0%. I mean, you can start closing these and take risk off. So that's what I would say, MRP, is that, get to a point where you got several of these off. Then when you put a new one on, reduce the risk of one of your other ones. So take off that one that is already paid for itself. And before long, you got a little factory going to where you've got a series of free put debit spreads. God, who thought this up? This ain't us, y'all. Tom showed us this. I don't know where Tom got it.
He's playing around. This trade is called a long put ladder. And whenever you read that, you go Google that phrase, you'll come up and it said it was always for a debit, but somebody had to have been playing around and rework the strikes to make it into something where you collect the credit. And that's when the magic starts. And no one ever thought about that. It was just basically a back ratio where you split the short into two separate strikes instead of two at one strike. Now, and so it just evolved into an income producing trade. And I said something a few minutes ago, I want to clarify, especially for the new people and the small account people. I said that instead of looking for twice the debit for my credit, I go for 3. Now that makes it more risky.
Yeah.
Okay. Because the strike moves up. Now, in regards to someone like this question triggered it, where you're a little concerned about what would happen if the price went against us. Well, you're going to get into trouble a lot quicker with what I do than with the double. So what I suggest for those people who got smaller accounts, don't have a whole lot of these on, and maybe worried about a downside, or maybe the market conditions change, is to go, maybe not even look for double wide, look for 1.5. Look for because that puts that second strike down lower and lower, and that reduces that tail. Because at first, when you first put these things on, you're getting that tail drooping. until the thing matures and that hump starts to rise, you are putting on some risk. And so I suggest, see, I got 14 of these bad boys going on. Okay. So I can, I got them spread out enough where I got a bit of my tail goes way out there before it starts to droop. So I feel way more confident about a down move than I would have 10 spreads ago. So what I suggest those people, until you get several of these things on, maybe you should just wait a while, be patient about trying to drag the income and just hang on to it, and don't make so much money. Hold on, get those strikes lower on the second put until you got them matured, and then you can do like I'm doing if you want to get more income. See, that's how I do it. If it's 3 times, it's an income trade. If it's 2 times or 1 time, it's a hedging. You see, you can slide that scale to determine what your needs are. Is it going to be a hedge or is it going to be income? It's actually both, but how much of one or the other do you want? So just be careful. And that's how you can do this, and with a whole lot less fear.
Yeah, because when you let, like Ken's saying, go slow, let them build up. And after a while, you're going to have something that starts to look like
What Bobby's got there.
Yeah, what we've got here.
It's
And
a
you go,
monster.
oh my God, look at this thing. I mean, do I care if the market goes? No. And then I took off risk while ago. So, and now at this point, here's the prudent thing to do. When we have enough of this and you've got a little mountain like this, and let's say today you putting on one, right? So you put on your 111, go down to the very end, this little one that's way out here, that's got 11 days on it, and close it. So you're taking that risk off, right? I mean, I could close that for 45 cents, but that's fine. I sold it for $20, y'all. I can buy it back for 45 cents. Are you kidding me? That's a no-brainer. And then you've got a free hedge to the downside. And then the fact that you put on new risk today is not that big because you've taken the risk off in this one. So you really haven't added to your risk.
Bobby, if you notice that when I put these trades on, my buying power doesn't change. It just doesn't change. It's just these things have gotten so big that it's looking after itself. And I tell you what, it's easy. I don't sleep at night anymore because I'm excited about it, but I don't stay awake worrying about it.
Yeah, I can't. I tell you, I have never, and y'all say, man, we trade a lot of stuff. I've never been so excited about what we got going on. I mean, this is, I don't want to overhype it, and I don't want y'all to lose all your money. I want you to be careful. This is, money that we are putting at risk, but we are risk takers. That's what we are. We leave the cage, we leave the cave, we go beat the dinosaur over the head, and we drag the dead carcass back to the fence. That's all we're doing. You got to take risks. If you stay in the cave, and never do anything, to me though, we've got strategy, and I think there's strength in our numbers. What y'all are doing, y'all are sharing some really, really cool stuff in the room. Y'all shared some YouTube videos on TQQ. Y'all shared some articles on TQQ. Y'all shared some other companies that have indicators on TQQ that I've signed up for, right? We don't know what it is that they're doing, but we'll use it. Now, the fact that, it's kind of an enhancement to what we're doing, but since we can't replicate what they're doing, then we're kind of off to the side, because you and I, we don't want to rely on anybody. You don't want me coming in and going, hey guys, we're starting an alert service so that I can tell you what trade to do today. Well, that's a bunch of crap. We don't want that. We want to come in here and be able to do this ourselves. If Ken goes to glory tomorrow and I join him, and we're both, crossing the pearly gate, and we're not here, we've all got to know how to do this. And that's where we've got to be. So we've got to get everybody across that goal line. So next week will be kind of good, right? So you're going to be trading Monday, Tuesday, Wednesday, and Friday. And, you're going to go in and go, what do I do? And so do it, go out and do your thing. We've got a strong little thing. If you ever get scared about it, you need a one-on-one. Let's set up a one-on-one and, get you set up. But I'm excited. I'm really excited. This is the coolest stuff. It's a strategy. It's not a trade. Now we've got several trades that are part of the strategy. And I hope you're taking advantage of most of them. I think they all work well together. All right. So MRP's got a question. For the BSH, if one has a $50,000 account, how many do you need? The Analyze tab is your friend. So the Analyze tab will tell you how many you need. So when you go down here and you say, you've got 4 vol steps, move it up 15, make this 20% down. How do you do that? You set your price slices. I do mine at 0, up 5, up 10, up 15, -5, -12, -20. -20 is where I really want to see. So if move this to 15%, if we get a 20% move, how much am I up? Well, that's that little yellow number there, right? Can you imagine if it fell down to here, we'd be up $755,000. But we don't anticipate that. So here we're only going to be up 120,000. Okay, well, that's just with the single simple. Now you got to say, how's my entire portfolio look? How's your portfolio look? So are you comfortable with me being up $7,244 from a 20% down move? Oh, heck yeah. Oh, heck yeah. On a 12% down move, I'm up $10,000. On a 5% down move, you're up 13, but probably not that much because the volatility wouldn't be up to this amount, the 78. So, got to take that in. That's why I measure down here 20. So if you're down, you got a $50,000 account and you come down here and it's showing that you're going to be minus 69,000, that's at the top level. Whoa, you don't have enough black swan hedges on. Buy. Then you need to go in today and buy you a tranche or 2. And so what you do is you say, well, let's analyze. So you go into ES, right? And you say, well, buy me a tranche. So you want to be more than 60 days. So let's see if we can do 90 days, 50 point Y. We could do that one. Let's see, 73 days. Here's, 2750, 2700. So what you would do is this, you would go sell, right? 3 of those. And then you would go, hold your control key down and buy 5 of these. So that's your black swan hedge. So if you wanted to buy one today, then it would cost you $242.50. That's what this would cost you. Okay. So then you'll do this. You'll go analyze trade. Analyze the trade. Okay, now, so change this from ES22 to just ES. And then you're going to hide positions so that you just see your, make sure that's the only trade showing up. I'll take it off and it goes flat. So I know that's the only trade being analyzed. So now I can go hide positions to show all. Now see what you're down. Remember, I was only going to be up what? A couple thousand or what it said ever. Now I'm up 30,000. Now, if it still says you're going to be down 50,000, here's what you do. Come over here and go sell 6, buy 10. Then you come back and you say, okay, now what would I be up 20% down with? I'll be up 64,000. Are you happy with that? Yes. So if that's where your happy spot is, buy 2 tranches. Sorry, that should be 6, 60. Okay, buy 2 tranches. That's what tells you, MRP, that's what tells you the threat. So every day we're going to come in, we're going to look at this. So remember, what do? First thing I do, we check the market. What do I think for the day? Is it going to be catastrophe? Is it going to be a fine? Then we'll check the volume profile of the big green monster. Then we check the skew driver. Then we check our Greeks. Then what do? We say, what trades do we need today? We put those trades on, and then we go about our merry little business and let the plan work. And keep in mind, if you're in the TQs with me, you've got to promise me that we're long-termers. We're long-term on Pepsi. So Coke says that their management's acting too white, and we hate white people. So we got to do with all the way the white people, because white people are evil. So we don't buy Coke anymore. So we're buying Pepsi, which is fine, because guess what? Pepsi is a component of the NASDAQ 100. Now, it ain't as good as Coke, I'll tell you, but if it's going to help my QQQs rise, then I'm buying Pepsi. Everybody with me? We're going to Costco. Why are we going to Costco? So the NASDAQ 100. Am I driving a Tesla? No, because they do too much environmental damage digging all those batteries. I'd rather be more environmentally friendly and drive a Ford. Everybody good? All right, awesome session today, y'all. I'm excited.
One thing I'd like, one comment for, I said earlier that because of these paid for debit spreads, that I'm no longer doing the VIX hedge like you taught in your trading plan.
Yeah.
That's me. Don't listen to me. You have to look at your account and decide if I'm crazy or not, because each of us are different. But I didn't want to lead anybody astray. It's just I got so many of these
Yeah.
debit spreads sitting around that I looked at and I'm going,
I really don't need it.
I don't need it. Now, if I was to, for instance, drop some of these hedges, like slow down for whatever reason, then I would put one on, because those things, that's for $100 a quarter or $100 a month, because that's cheap. I
Yeah,
just want to make sure nobody gets led astray. Like everything's done here should be done with a grain of salt. Don't believe any of us. Test it yourself.
right. Don't believe me. Don't believe me. Y'all never. I remember y'all only have heard me tell y'all what happened in March and February 2020. Y'all heard my story sitting in the podiatrist's chair. You
Hey
don't
guys,
know
I
if
got to go. My wife wants me to call her, so I'll see y'all
Okay,
later.
Ken. Hey, Ken, have a great Thanksgiving, okay?
Yeah, blessings to y'all.
Yeah, awesome. So let's just keep in mind, y'all don't have to use the entire plan. What's the entire plan? We're long the TQs, or if you want to be long UPRO, do UPRO. If you think that gives you more diversification, you want 500 companies, do that. If you don't want UPRO, use the SPY, or use the Qs, or use Apple, or use whatever you want to be your long portfolio. Let's say you don't want to do any options trades. You just want to set it and forget it. And you're in a 401k and you can't do the options trades. What would I do? I'd probably do 50% TQs, and I'd probably do 50% TMF. Well, but I'd leave 10% in the account for cash, right? 10% cash, then split the 90 between TMF and TQQ. Then what would I do? I'd run the Lacello spreadsheet, the algorithm that I've developed. Run the algorithm, let it be an ATM machine. When price goes up, convert shares to cash. When price goes down, take the cash and buy shares. I mean, it's beautiful. So got a great strategy here, y'all. And I do hope y'all have a wonderful, wonderful Thanksgiving. I will see y'all week after next.